Hey, welcome to the Closing Beat, everybody. Happy Wednesday to you. Hey, by the way, before we get started, we are moving this show to a different channel. And if you want to go over there and subscribe to it or be notified about it, that's fine. We'll be streaming here for the rest of the month. And then starting on February 3rd, we will be on the new channel. This will still exist. We're just keeping the Closing Beat and maybe some other fun stuff on the other channel so that the algorithms get what's going on. Anyways, we're financial advisors here at Jazz Wealth. Hope you'll check us out, refer a friend, let somebody, come watch the channel, learn something, whatever. And today, well, first of all, we're like, how many financial advisors do you see like talking about the stock market the way we do? Proud of that. So we're going to do it a little differently today. We are going to do the top-down analysis. We're going to do some stocks in the news. We're going to do a new segment called Sector Breakdown, the Trader Time, and you learned it here first. I love it. Let's get started. So anyways, here's the S&P. We're just a fraction of a percent off of highs. So the little bubble is showing that, right? So it's a fraction of a percent off of highs. And today, largely a nice little up day. Nothing too crazy, but kind of nice. The trouble with that is it was a very thin rally. You know what I mean when I say thin rally? There's different metrics you can use to follow this, but it's either a broad-based market rally where everything's participating, even down to the little real estate utilities, all these little companies are all participating, or it's a thin rally where the market moves in one way or the other only because of a few names. It's really popular around earnings season because some of the bigger names can have big moves and all of a sudden you're moving the entire market. Well, we had that here today. In fact, we had a thin moving market as far as the S&P goes. So if we go on over to the S&P, we can find that 57% of all stocks today, actually in the S&P, went lower. They didn't go higher, right? All the stocks. I said S&P a second ago. 57% of all stocks actually fell. So what are we doing? Like, how'd we get such of a rally today? Well, 88% of today's gains, I checked right before the close, came from just these 5 stocks. NVIDIA, Microsoft, you could probably guess the names, right? Netflix, of course, with their earnings, actually finished almost exactly average for what we shared yesterday. Amazon, there you go. Amazon had a good day, hit new highs as well. And then on over to Meta, which had a 1% day, but 88% of the entire S&P's gains came from those stocks. If you were to look at like a heat map, it'd be pretty impressive, right? You would only see those names. Speaking of Netflix, that is one of the stocks. Oh, no, I didn't. Before I go on, we look at the Dow, right? So a nice little small day in the Dow. There we go. The NASDAQ naturally having a little bit better day than the S&P because of the tech names that had their rally. And then the Russell 2000 was actually slightly lower on the day, all those small caps. You've got bonds. My God, bonds pulling back ever so slightly there. We have a really interesting environment in the bond market right now. We're going to cover that in just a little bit. Crude oil pulling back, starting to ease down a little bit. Look, the tariff talk, right? It's getting a little less... it's not as tough as it was, right? So maybe it's not as high as everybody was expecting. So oil's been able to retreat a little bit on that. And then, of course, I do want to point out the VIX. Slight little uptick in the VIX there, even though the market was higher. Maybe people anticipating a pullback. I did, so we'll talk about that in just a little bit as well. Some of the stocks in the news today, we got to go with Netflix. 10 million more subscribers than what they expected. It did make a new high. Notice it stopped at $999 on the dot. So everybody making their bets at the $1,000 strike price in the options market, if you're familiar with how that works, that's why it stopped right at $999 or in that area, right? Just below $1,000. So anyways, 10 million more subscribers than they thought. And 301 million worldwide subscribers. That's pretty impressive. So when you look at Netflix today and you see the gap up, the only difference between what we talked about yesterday and what happened with Netflix is it actually pulled back throughout the day a little bit. I'll share in a minute. It was one of the trades they put on for office trades and got out of it. It was a profit that quick. I was not expecting that. Alphabet. They're going to invest $1 billion in Anthropic, which is Claude. If you've never played with it, it's awesome. So they're going to get a whole lot more money, which actually is not that much money for how much it costs to do all that stuff. It's fascinating. Abbott Labs beats on earnings. Ally Bank, it's a lot of earnings stuff today. Ally Bank beats on earnings and had one of the bigger moves that it's seen on earnings day in a while. What else we got? Oh, in the oil space, you got Halliburton. It did fall with everything else today, but it did beat on earnings. Johnson & Johnson, this is a tricky one. So I didn't make a chart of this. I could have made a chart, but Johnson & Johnson was higher or beat on earnings because of the cancer drugs. So let's say, cancer's never going to be cured in any way. Check this out. Drug sales up 29%, just their cancer drug sales up 29%. The entire beat, if you look at their earnings, the fact that they beat on earnings, it all came from their cancer department. And cancer dependency, which is their segments here, accounts now for 18.8% of their total revenue. You know how they would say Apple services or Amazon Web Services, whatever, that portion has been growing and oh my God, it's growing. Well, for them, that's unfortunately growing. And that is the entire reason that they beat on earnings. Very fascinating for that. I'm sure that'll get the chat going just a little bit. Hey, a couple other names. I'll go over here to the charts. A couple other names is Procter & Gamble. Higher today. That one we took off in our office trades. I'll cover in a second just because of that earnings move. Seagate Technologies now getting itself a little extended and back closer to highs. They had earnings as well. They beat on earnings and revenue as well. And then Travelers, same thing. And I was just trying to point out, I'm not going to go through all the earnings. I was just trying to point out some names that actually had interesting moves that you may be interested in. All right, let's go to our sector breakdown here for today. This is new, trying something different. We're going to do a little different look. There's 11 sectors in the S&P. And inside the 11 sectors, they're either going up, down, sideways, right? We can either track them by being overbought, oversold, neutral, right? What's the timing? Is it good to be buying, good to be selling? What do you want to look at? And for those of you that are more midterm to long-term investors, it's just a short-term check-in to see what areas may be doing well. So I'm going to start with, over the last 5 days, the most overbought sector is the financials. And that's easy, right? Because it's been earnings there. And instead of going through everything, I thought, well, let's give you the most overbought stocks. So currently, sector, I believe. Yeah, and then Globe Life, which doesn't get a lot of attention. I thought they were going private, maybe, or getting sold. I don't know. But that is that. Over the last 5 days, it is up over 5%, the sector, not Globe Life. The second most overbought sector is in the consumer discretionary space. There you go. Up about 4.8% over the last couple of days. And a lot of that, look at this guy, this Tapestry. We're going to talk about Tapestry in a minute. I had a little revenge bet on that one. Ralph Lauren is the other one there, and Garmin, those being the most overbought. It is not a sector where you're going to see overbought like that, like where you see that hockey puck or hockey stick kind of a thing. It is more of a tighter movement. I don't know how to say it in the short term here. The other one, which you might have been able to guess, communication services. Now, this doesn't mean that they're overbought. I'm saying they're overbought sectors relative to everything else. And if you look inside of that, you are going to find, if you like this sort of thing, let's go with that. Alphabet being one of the most overbought, and Live Nation, I believe, is the other one in the short term. Funny enough, the most oversold is Verizon, which normally doesn't move that much. So a lot of activity over there in Verizon. In Las Vegas Sands, would point that out. So if you like these kind of things, you like these little beaten down names, that's of course where you'll be looking. Let's talk the trader time. I teased that a little bit. This is what we did in the office trades here today. If you're familiar with it, I'm going to actually do a video tonight to update everybody on what's going on, but you'll get a little sneak peek. The VIX was looking to hedge part of the portfolio, and plus, the market being overbought here in the short term. So put a position on in the VIX. We used options for that. Pulte Holmes closed it out. If you've been following along, by the way, what is he talking about? What is this office trade stuff? jazzwealth.com/research. It's a pay site, right? So it's $13 a month. All proceeds go to Drumcore International, but what I do is I just show all the trades, like how much you make, how much you lose, the pain, the goodness, and all that stuff. And I try to teach a little bit along the way. So if you've been wanting to learn from someone who has no other bias, I'm not trying to sell a course. I'm not doing it. Not that that's wrong, but literally it's just $13, and we go use that to help sponsor Drumcore International, which is we're really excited about. And so that's where all this is housed, if you want to see the details of it. Anyways. So Pulte Homes, if you are a member of the site, I had tried to get filled on a position, and I only got 2 contracts. It was up like 22% overall, and I was like, let's just get rid of this thing and move on. Hess was able to close that one out for over a 50% profit. I mentioned Procter & Gamble. Well, you can guess why that did well. It was a directional play for us on that one. Had 2 different puts, 150 and 155, I believe, or 160. So closed that one out. Notice a lot happened today. Lennar, this was different. You short straddle on Lennar, if you've seen the volatility on that one. So a little bit different strategy there. We'll cover it tonight. And then the SPY, that got called away. I sold the calls and then that got called away. So that one's done. That one should not be reporting there. I mentioned Tapestry a second ago because that one is not very nice. Have the $70 call and something else somewhere. $75 call was my revenge trade. So that's my one time today that I said, you know what? I'm going to go way heavier here and try to get some revenge. Watch it gap up like $10 tomorrow. Wouldn't that be fun? All right, let's do this. You learned it here first. We'll talk about something relevant with the interest rates and the movement of interest rates lately. And we're going to talk about how this works, show you a little bit of data, how the market is doing relative to these rates. So what's happening is the Fed cuts rates, right? Rates rise. What's going on there? It's no surprise. You've seen what's happening there. Well, it's actually happened before, 1981, 95, and 98. And historically, if inflation does not tick back up, then it's fine. It's a good thing for the stock market anyways. Now, there's 3 ways we're going to break this down. We're going to look at the times where, how'd the market perform when the Fed cut into a non-recessionary environment, meaning their rate cuts were not led by or preceded by a recession inside of this 1-year window we're going to look. So the concept there would be the growth pricing in the stock market picks up, meaning I'm interested in taking more risk with the lower rates and all this stuff. And we're going to call that the normalized phase, right? That's a normal, the Fed would get everything they want. It's a what do they call it? A Cinderella story. They cut rates, inflation doesn't tick up, and growth pricing continues to be strong. Hey, a normal rate cutting cycle. The other one is going to be when the Fed cuts rates into rising inflation, and then they have to pivot back because inflation went up and they got to start raising rates again, right? That is not good. That is a recessionary type move, or has been historically a recessionary move. And the third one is the Fed cuts into what's called a growth scare. So we're labeling it as a growth scare. And the concept there is they're cutting because the higher rates are slowing the growth of the economy. And so they're scared that the growth will slow. So you have those 3 reasons. There's others, but that's what we're going to focus on. So here we go. Don't let it scare you. So this is the first day of the cut. And then we're looking back 6 months to see where did the market come from, and then where did it go 1 year out and 2 years out, or this way, 2 years out. So there's a couple different scenarios, right? We have that normalized rate cut scenario where the Fed actually just cut rates. We did not go into a recessionary environment, and inflation did not tick up. So that's that green line there. You can see the 2-year return, right? And then we're going into the one where they cut into a recession, right? And then we got the growth scare in there. So this is not probably new news to you, right? But this is the performance going forward. The blue line is showing where we're at. So we're currently, the stock market is more in line with the Fed's going to cut rates, inflation's not going to tick up, and we're going to have an economy that does not go into a recession. If we do, funny enough, let's see if they actually label it one this time. Ha ha. But anyways, what is different, if you look at this, is this sucker. What if we look at the 10-year yield? Do the same thing, just, hey, when the Fed starts cutting rates, what's the 10-year yield do in the various environments? See the blue line? It is wildly, wildly different. The 10-year is way outside of any historical norm here. And so you have a lot of people playing for that retracement, or in this case, retracement of yield, retracement in price, because how bond prices work. And so everybody's talking about this because of how fast it's moved up this way. The amount that it's moved up is not actually that odd. So the last slide I have to share with you here is, what was the peak in the 10-year yield within 6 months of the first cut and within 1 year of the first cut? Well, if you compare it to what we have right now, it is the second highest. It's elevated and stuff. I could see why you'd make that argument. And that's why when you come over to something like the charts page and people go, oh, well, let me pick an ETF to play along. It's just the first one I think of. That is why you see such extension on these bond ETFs, if that's where you're looking, or bond prices in general, because of how fast that 10-year took off. It's just everybody thinks it's going to be just fine now. And so we're starting to see that retracement there. Anyways, if you have any questions, feel free to ask. I will bounce around to a couple other different stocks just to see what was going on that I may have missed here today. But otherwise, I'm happy to answer your questions. If not, hey, that's cool. That's cool. That's good with me. I'll just roll on, do my thing. If you are a research site member, the class will be, I'll be doing it tonight, just a summary to give you the overview there. I saw solar stocks doing a little bit weaker, or were a little bit weaker. And then a lot of the oil service stocks. We talked about Halliburton, Hess, right? Very helpful for us. We have XOP in the office trades account. And that one, it did finish lower. Great. Oh, awesome. That one was one where I looked at it at some point throughout the day, and I'm like, you sucker, you're going to take off again without me, aren't you? Anyways, these things happen. Let's see what questions we have there. I think you took a call. Oh, sorry about that. T's our 116th subscriber to the New Jazz channel. I love it, man. No, you get a cookie. 116, you get a cookie. I love it. You sold calls on SPY too, but for later January next week. Oh, sticking in the same month there. Yeah, did I get my... I know I did the VIX. What I was trying to do is balance out all or a lot of the positive deltas in there. But I don't have the S&P short. That was actually the assignment. So I sold the 0 DTE calls. They got taken away, and for whatever reason, it's still on my trade blotter here. Thoughts on Wolf as a value play? It's pretty beaten down. CapEx last year. It seems pretty oversold now. I have not looked at that one recently. And I can't type today. Ooh. I don't know. This is not what I was thinking. I don't know the answer. This is not something I'm familiar with. And largely it's just due to the price. Anything that's lower price, I haven't looked at. Will the Fed meeting at the end of the month be a big market mover, or is everyone... It'll be a big market mover on the day, especially with Jerome Powell. It has been. Occasionally, we've shared that where we'll look at the market moves on the day of the Fed announcement and then looking forward. We'll do the same again as we get closer here to this one. But yeah, it's going to be a market moving day for sure. That old 2 p.m. move. And it's fun. If you look at it on a really short time period, it does the same thing every time. Just throwing that out there. Now it won't because I said that, but you think the tariffs kick in, we'll see some increase in inflation, which will lead to slower... I think if they do get to these tariffs they're talking about, it's going to be super temporary, like when they banned TikTok. Maybe not that temporary, but it's not going to be... Maybe Russia, okay, maybe with them, I get that. But the whole Canada-Mexico tariff discussion, I think, come on, there's just everybody's going to go talk about it. They're going to work it out. Everybody hopefully feels like they won. So I don't think that's going to be a long-lived thing. I could be wrong. Okay. I'm going to wrap it up there and get on out of here. Hope you enjoyed today. Hope you learned something. We'll be back tomorrow to do it all over again. But in the meantime, stay warm. See ya.
When you wish upon a star, makes no difference who you are.